Give me euro, give me vert. No, I couldn't even say it. I was going to say euro dollar, but I still couldn't say it. Give me euro, give me dollar, give me that which I desire. Boom! Okay, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right, Mark, what looks like a movie set? Well, besides that intro. Hey, good morning. I'm discombobulated. Let me get everything moved. Sorry, I was up till 1 a.m. doing some MIT work. MIT! All right, cool. So I'm a little behind. Didn't get much sleep. What do you guys... I don't know what you're talking about. All right, so anyways, hey, good morning. My name is Wayne. I'm reading the chat, by the way. That's why my eyes avert. My name is Wayne. I'm a currency trader. Right now, I'm in the business, beeswax, of shorting the dollar, and it's not unbelievably weak this morning. So, I wouldn't classify it as strong, but it's not weak, so it's one of those things. But I'm looking for things to buy. That's pretty much it. So if I'm selling dollar, I need to buy something with it or trade it. That's why we're traders. So I need to trade my dollars and convert them into something else. And I've been, selling yen and trading those to convert them into something else. And, it's been all good, right? Today's been sort of a hesitation day. So that's that. So I'm stuck in the middle, short-term technical fluctuations within long-term fundamental trends. And then, of course, the news and the waves that occur in between all of this, right? So it's the study of the very, very big, but the application of the very, very small. So, we need a unified theory of physics, well, quantum physics specifically, but we could also use one for trading as well, right? Yeah, my screens are off today because I was up. Like I just said, I was up till 1 o'clock in the morning doing homework for my MIT course on cryptocurrencies. They kind of blindsided me at the end of the first week. The homework was pathetic, childlike. I'm like, dude, this is nothing compared to Harvard. And then the second week, they're like, hey, thanks for doing 14 hours worth of research. By the way, here's a whole bunch of crap you need to do. You're like, oh my God, it wasn't more difficult. It was just a lot more to submit. And I'm like, so one was, so I don't know. I'd probably make suggestions for how they'll improve the course. So anyways, so those are off. I haven't been trading this morning. In fact, I slept in all the way to 7 a.m. today. I haven't done that in forever. But I don't like to show up with only 5 hours of sleep or something. Cool. So anyways, so let's focus. We're going to do some technical analysis today. The fundamentals are already in play, but technically things are a little discombobulated as well and I'll have to deal with it, right? So we'll do that, right? Kevin's like, hey, one step at a time. Yeah, sure. Okay. So ask questions, get involved. We'll do technicals today. I don't think this will be a long stream unless you guys want it to be. So you got 100% of my attention and my efforts. So please click the thumbs up button and tell YouTube this is quality content. Subscribe so that you'll be alerted to future streams. Right? And leave comments on the recordings. Once again, that tells YouTube this is quality content because you are interacting with the content. And now they've changed the terms of services so that even if I don't want to monetize the videos, they're going to monetize the videos anyways and not pay. They're not going to pay. You're like, wait, what? Yeah. So they're going to just monetize people's content and keep all the money for free. Interesting, huh? So anyways, I'd like to thank Traders Way for being part of our community, a sponsor of our, a good sponsor of our good faith in working hard, learning hard, trading hard, and doing the absolute best that we can to improve our skills and think about things like trading conservatively with discipline, managing our risk and not over leveraging, and really building a long-term successful trading business. They like all of that. And so they're part of the community because they would like for their clients to have that kind of attitude. They think this is going to make you a better trader. And a better trader for a broker is a better customer. You will be worth, you offer value to your clients if you're, trading other people's money, but a successful trader is also worth more to service providers. So they're like, man, education, education, education. So if you think that's a good business model and you understand them, but ultimately you appreciate what they're doing by bringing Forex.Today to you, then you should say, hey, you know what? I'm going to pay it back. I'm going to open up a demo account. And then, of course, if they earn your loyalty and respect over the weeks, months, or years that you develop your skills, then when you're ready to trade real money, you already have someone you trust, tradersway.com. Thomas says, how do you sign up for the swing trading group? What do you mean by again? Do you want me to tell you again, or have you already been a member? Start joining for the first time is easy. You go to FX Boot Camp. You put money in to take the training courses, and then it says, hey, do you also want live support? And you're like, yes. It's $99 a month. All right. Cool. But let me know, TVA. Okay. I'm reading your chat questions. Yeah, not sure. All right, cool. All right, cool. So anyways, Asia Pacific still red hot. Pound is recovering. Euro is up and then sideways and up and sideways. And Kitty Cat's giving back. Well, let's see. Okay. Okay. So I'm already on Kitty Cat. So having it weaken is not good for me. I'm already long Euro. So having that weaken is not good for me. Kiwi's covering great. I don't know how long it's going to remain this way, but I might start looking for opportunities to buy the dips in Kiwi. And Pound has not been strong for a while, but maybe, just maybe, like if you start doing stuff like this, and of course this is an index, it's not the actual currency pair, but if Pound can, let's say, maybe breach this area, maybe we'll have sustained Pound strengthening, which is actually very good. I'm very happy, right? I'm very happy with something like this. Is it time to front run, or is it wait till the June? Oh, front run June? Well, we covered that last week in the swing trading group. Okay. So anyways, Pound coming around maybe, and then what? Aussie has been weak, then Aussie's been sideways, and now Aussie might be trying again. Okay, good. Those might be signals, right? The drawing tool is called Epic Pen. It's a pen, but it's epic. Pen-like, but with epic powers. All right, so let's go around the world. Let's start with the dollar. Okay. And you can see this one, I didn't get the breakdown, and I'm running the risk of breaking even. Okay. Which is disappointing, but I get it. So I'll probably be selling this. I mean, I'm at 121. Because of the psych entry, it's difficult to manage the risk now, meaning that if I break out at 121 and then it drops because of the psych level of 121, it's difficult for me to get back in. I kind of just need this to stick, because I don't think I'll just sell again there. If that's what I wanted to do, well, then maybe I'd just move my stop, and I might need to do that. Because the next entry is sort of 121.50, right? Right? 120, 151. So that's another 50 pips here. So do I want to risk 50 pips to see? I don't know. So it's a conundrum, because I still think down. So yeah, that's it. I mean, again, if I break even on this, it's going to be hard to get back in here. But at least I don't risk the negative 50 pips to get in plan B. You see? So I'm still in plan A, but it's not looking very good, huh? What do you think? What do I need? I need this to stick. I need this to hold. But I have a feeling it's just going to hit 121, take me out, and then maybe roll over. But that's just right. Okay. Yeah, well, Raymond, that's what we're looking at is the trade balance, and really we should be looking at China, that right? So I think New Zealand is in a trough. Okay. So that means I can start buying dips in a trough, right? Okay. And same thing with Aussie, right? But that's what we're looking for. Once again, I missed an entry here, but that was several days ago, if not weeks ago now. So I don't know. It's like one of these things. How do I want to play it? Depends on how aggressive I am. It's not a great trade yet, but I don't know. I don't know. I have a feeling that I got to do it today if I'm going to do it, or wait till next week or something, right? So, anyways, that's with the Aussie, Euro. You know, I got the higher high, right? I got the higher high. I can't remember. I think I might have bought this roll reversal and then got knocked out. I think I did. Anyways. Okay. Otherwise, I'm still in here. I think, let's see, 1,550 pips. Yeah, I have 327 pips on the euro dollar. Okay. Wayne, the inflation on the U.S., is it really transitory? Absolutely it is. Okay. The funny thing is, last summer, last June and July, on the FX Bootcamp YouTube channel, I did something called Off the Charts with Wayne McDonald, where we talk about Forex, but not charts. we only talk, I don't know, it was more like a lifestyle channel. We talked fundamentals, but it wasn't lecture, it was discussion. But anyways, yeah, I talked about that, how this summer, or this year, I should say, 2021, we will have 6% GDP, even though we couldn't even do 2% in a normal year. So, yeah, so that's a fun way of me saying it's transitory. And I might have actually used the word transitory. It's sort of a central banking word. So a whole year before it happened, we clearly talked about it, and I clearly explained why it was going to happen. Okay? And it's not that I'm right, it's just, it is. I mean, dude, you either know or you don't know. So anyways, yeah, so is it transitory? Absolutely, for sure, it's transitory. Okay. All right. Pound, okay. That's it. This was the one trade, and I'm still sort of waiting. Is there a better setup than this? Let's look at the ends. And look at here. Let me get rid of this. Drop into an hour. And I am long. I can't see it. Long right there. What do you stink? What do you think? You like it? Is it okay? Is it all right? Yep. Typical. Well, it's not perfect because it's a trend trade inside of a range, but it's a trade. Right? It's not good. It's just a trade, in my opinion. CAD giving back, which is very unfortunate. Okay. Once again, on this, what I'm looking at is this is a price in which you would expect and anticipate a reversal. This is the weekly swing from here to here. And it's come together and now created a higher high. So now I have permission to engage. Okay. So if you thought this was going to 100, okay, well, the whole trend is starting at 84. Currently, we're at 84.60. Are we going to 90? Are we going to 100? What do you think? My guess is 90, 85, 100, and that's how the year shapes up. Theta wants to know if the largest purchaser in commodities in the world is really that important to a country that sells commodities for a livelihood. Marina, what do you mean by struggling? You mean struggling to find trend, sort of range bound on the shorter run? Okay. Again, one of the things I talked about with the swing trading group at the beginning of the month is expect May to be like this and then expect that at the end. Of course, I don't know if that's going to happen. So there's a lot of, there's a lot built into that, right, Morena? Where you're right. Okay. Yeah, you're right. It's struggling, except I'm seeing right through it. And I'm not saying it's correct. I'm trying to share the honest way of me looking at the charts so that you can understand me. Because way over here, okay, we talked about this. Then I look at this period here as not as a range, even though it is a range. Totally is. Rangy. Struggling, as you say. Absolutely correct. Now, I don't know what's going to happen next, but I have a bias. And as we know, bias shapes perception. Good or bad, it's irrelevant. It just is. And so I have this bias where I don't see it as a range. It clearly is, but I don't see it that way. I see aggressive buying. Okay? I see a double bottom, monthly central pivot, weekly M2, and what I also see is that we're going to be here. But you're like, wait, that doesn't exist. I know. And I could be horribly, horribly, horribly wrong. Right? Yeah, just testing patience. That's the most difficult part of being a trader. If you're using fundamentals anyways, right? If you're a pure technician, then yeah, what do you mean? Right? There's always something to do technically. But waiting, that's what I was talking about, this unified theory of I'm waiting for the technicals to catch up with the fundamentals or vice versa. But I expect to have been in the spot. Okay? I think for those that got this but didn't see this coming, it's even more difficult psychologically. Now, I believe, Marina, you were one of the people that got, I think it was like pound yen, did this trade or something, did this trade or did that trade, and you caught it and nailed it, right? I can imagine others that, let's say, didn't anticipate that trade, got the trade, feel like, oh my God, this was so good, and then go through this period of probably buying again and not having it work, buying it again, not having it work. Then all of a sudden they give back all this up, all this profit they give back during this period like this, okay? That's really, that gets you back to break even, right? But then missing this because psychologically all they feel now or all they think now is this. It's not going anywhere. It's rangy. This is terrible. This, right? You can't make money trading Aussie yen, right? Like we all sometimes get there. I remember I had a coach that said you can't trade USD CAD. I'm like, what the hell are you talking about? Oh, I call it the yo-yo. I'm like, what is you stupid or something? Right? Like, what do you mean you can't trade the USD CAD? It's really funny. But you can get in an emotional state where you psychologically you believe that's true because you've been punished, or maybe that is we get ourselves in situations where we really can't do it, right? But in this case, I think a lot of what I prep you guys for is the psychological aspect of it, because if you were able to front run and then hit targets early and know what to do here, especially in a month you expect to be rangy, then you could like get this, oh, quick trade, counter trend's coming, you take your profit, it drops, and instead of frustration because you give back some trades, instead of the frustration, you're like, wow, so good, so happy I got out here. And instead, you're back here last week and then this week trying to rebuild your June positions. It's just psychologically so different, isn't it? And therefore, I think you're right. I think you're right. This is rangy and frustrating. At the same time, it's not. I see it like this. So I'm like, oh, it's not rangy at all. This is where I buy. Right? But both are correct. Both are correct. Do I think crypto's taking away? Dude, what's the average daily volume of cryptocurrencies versus the average daily volume of actual money? Right? Like, oh my God, Theta. Oh my God. I think we're now at like 6.5 trillion US dollars a day. Um, you know, crypto's interesting. Crypto's interesting for sure. But it's still in its infancy. Do I see the pivot theory differently during the fade to? Do I? I'm not sure if I understand, Jimbo. Try asking the same question differently. I'm not sure what you mean. Well, that's called price discovery, Theta. That's what all markets do. And by the way, I don't care that he has a PhD or she has a PhD. Um, I mean, I have a PhD that works for me, and I pay him money so he can live, right? Right. My gardener could have a PhD. It doesn't matter. If he should be a trader, right? So be careful, because I can tell you, my Harvard professors, they're reasonably smart too, but you know, I think there's a difference between well, let's just say being a trader is slightly different, requires slightly different skills, but whatever. So, you know, your PhD professor could be 22 years old and I got chunks of corn bigger than that, right? So anyways, so that's cool. Okay, that's cool. I'm not knocking you, but I'm just like, the fact he's a PhD professor doesn't mean anything. Very often it does. Is the part that I'm picking on, right? Yeah. This is what I'm picking on too, because a lot of people will say, "Well, he has a PhD, so whatever he says might be right." Well, you could have a PhD and be an idiot. Now you could be you're probably not dumb. You're capable of taking 20 years worth of classes, which, right, is questionable in of itself. Right. So you pass all the classes, can do the research, but okay, but that doesn't make, doesn't, I don't know. Okay. Whatever. Great PhD. But what we're talking about is price discovery. What's the value of the euro dollar? Who sets that? The market sets that. So are we picking tops and bottoms or setting tops and bottoms for cryptocurrency? Well, that's what a market is, right, Theta? I mean, that's what a market is. So it's sort of meaningless. The statement is sort of meaningless. It's just market price discovery. It's also volatility, which is normal in an emerging market. You can think of it as an emerging investment opportunity. Like, I'm in this class and they're talking about, like, oh, well, in 2013, I'm like, I remember that like it was yesterday. I was trading currencies, right? I mean, it was just 2008 to me seems recent. I remember every single day of the financial crisis, day by day by day. 2013 was just yesterday, and they're like, well, Ethereum was built. You're like, okay, great. Right? It's not that long ago. It's a very young industry. It's not too late to get into cryptocurrencies. You should probably teach your children and your grandchildren to learn how to program smart contracts, right? And or lawyers, right? Lawyers in the near future in law school are going to take programming classes. I mean, it's really fascinating. Okay? Is that right, Theta? Yeah, well, you don't need many tools. You could have no moving averages, right? Right? Or you could have two. The thing is, you have to know how to buy and sell. You don't need a lot of tools for that. Like, I'll get rid of the 200. Okay, I might. All right, look. If you read my book, and I don't even have a copy of my book, I guess I have to go to Amazon and buy a book. If you read my book from a long time ago, I use these two moving averages to tell me the direction of the market. Hey, guess what, Sherlock? The market's bullish. Is that enough information? Theta, I don't know what he's talking about. As long as he's buying you the drinks. Do I need more information besides this is a bullish market? Ricky says, and technically you don't even need moving averages for that. No, but they can be helpful. So what other information am I getting from these two moving averages? Yeah, the speed. Gone viral in Africa, nailed it. Did you just read the book? That's cool, right? He's like, well, he's talking to me. Yeah. Well, speed. Literally, that's the right answer, right? This, right? Okay. This is when it becomes bullish. And you're looking at the angle and separation. When they're moving away from each other, then the bullish market is becoming more bullish. And if they narrow, then it becomes less bullish, but it's still bullish. And therefore you adjust your either your confidence or your aggression level accordingly. You adapt to changing market conditions. And that was the big part of the book, where people didn't know how to adapt either their trading aggression or expectations. Every trade to them was just like, you bought it and it's going to go somewhere and you don't really know how far. Or I'm like, dude, you don't know? Like, you don't know if you're aggressive or conservative? You're like, no, I have no idea. I just bought it. Okay, and that's what Forex traders were like back in the day. Is there another tool that I can use to make this, to discern the angle and separation between these two moving averages, maybe make it a little easier? What kind of tool could I use in combination with these moving averages to help me analyze the angle and separation between those two moving averages? The months that trend are the ones that have a lot of traders. But anyways, that's right. Lucas nailed it. Miggity MACD. So you go insert, indicators, custom. I'm not sure which one it is. No. Insert, indicators. Wait, that's probably the same one. Insert, indicator, custom. I don't think it's that one. No. Insert. Not sure which one it is. So I'll just change it to standard, let's say. Okay. So one of the things we use here is this. We were on a different time frame, weren't we? No, I guess not. We were on a different time frame, weren't we? Huh. All right. All right. So anyways, this helps me. Okay. So the first part of this is that in this period here, oops. I won't move. I have to do it here, I guess. At this point in time, the market, bullish, right, was a bearish market. At this point, it's becoming less bearish. No, Jim, I just didn't know which MACD. That's all. Okay, this is when the market is less bearish. Maybe an opportunity to take some profit, in particular if you're a million miles away and at support. Okay, that's the meaning. Okay. So how do we know the market's become technically bullish if that doesn't tell us we're bullish? When does the market technically become bullish? And by the way, I'll show you what this looks like over here. Right? This is only suggesting profit taking. But what if this was a weekly or a monthly take profit pivot point? Well, that would be helpful, but we don't have that information right now. Okay? So how do we know the market has become technically bullish? This is where you actually answer, by the way. Okay. Jimbo is technically right using moving averages. But what if we were using MACD? Thank you, Lucas. Nailed it again. Lucas, right? When the MACD crosses back above the waterline. See, the MACD is simply measuring the angle and separation between two moving averages. Here they're diverging. Here they're converging. See, this is when it starts to converge. At this point, okay, the distance from here to here is diminishing. Before that, okay, it was expanding. Now it's contracting. The moving average convergence, divergence, convergence, divergence. Okay. Divergence, convergence. That's what the tool is actually doing. So we know at this point, if all I was using was MACD, that's when the market is technically bullish. So you don't want to buy in this zone. Your last guru told you should, because your last guru doesn't know how to trade. Okay? So if they taught you stuff like this, what happens is some of the time you make some money, but most of the time you don't. You probably found you broke even. Well, you were buying in something that was technically still bearish, and on the long run, that's not going to work out much of the time. Okay? Okay? So here is when the market is technically bullish, as seen by two different things, MACD and the moving average crossover. Okay? Now, let's change something. How many people here use, well, let me get rid of this too. How many people here use the 1226 EMA combination? That's your standard setting for MACD. So if you're using MACD in the standard settings, but then you're using different moving averages, then you're not even using the tool properly. You think the tool is telling you what to do. Okay? And you probably got very inconsistent results. Now, can you trade with the 21-20 or 12-26 combo? Sure. Sure, if that's what you want. Okay. but it just technically tells you if the market is bullish or bearish. I looked at this and it's okay, but I found that it's in between. So when it's trending, it looks really good and you're like, oh my God, I could have made so much money with this. But then in reality, what you'll find out is it's a little too much price, a little too much market. And I separated price and market from that. Okay. So I separated and I'm like, well, what about, okay, if this is 1226, what I did is I changed it to 20. I got rid of the 12 and I said, well, how about 20 EMA? And then I changed this to 50. Oops. It might have been 60. Did I do 2060 or 2050? What did I do? 2060. I think it was 60. So I'm going to change it. I think it was 60. So long ago now, right? I think this is what I used for probably a year or two. And I'm like, oh, that gives me a better picture. See, the other one didn't tell me the likelihood of this returning to bullishness or collapsing and becoming bearish. The 1226 was two in between. It worked when it was obvious, and then when it wasn't obvious, it didn't work. So you got to be very careful. I studied it for years and realized that it wasn't giving me enough information to make an informed decision. And that's what your tools are supposed to do. So I changed this, and then one day during meditation, I realized that 2060 was working very well for me, and I wanted to know why. It bothered me. And then one day in a meditation, which I remember it to this day, I remember doing it. And we're talking almost 20 years ago. I remember the exact moment. That's the benefit of meditating, right? I remember the exact moment where I'm like, well, 21 is an EMA, is a fib number, and 55 is a fib number. I wonder if that's why it's working for me. Because I was searching for confidence. I want to know why I'm doing well. Otherwise, it's just luck, and I was worried it would go away. Why am I making so much money? Valid question. So I then went to this, and I said, 21, does it make a material difference? And they're like, well, it doesn't make a difference at all. And now, changing the 60 to 55, does that make a material difference? So I changed that. I'm like, well, that's a little, but it's not a material difference. In fact, it works even better. So I said, well, maybe it's Fibonacci. I was so young and beautiful then, right? Maybe it's Fibonacci. Or maybe I'm just measuring a market and making a decision based on my measurements. And that's the truth. Okay? So at some point, I created like a rule of engagement. And I said, well, maybe I should only buy after something like that occurs. And that's how I made money. It wasn't Fibonacci. It wasn't the lunar cycle. I found a way to analyze, and I said, I'm going to use this combo to represent a bullish market. And I'm only going to buy in a bullish market. Drop mic, walk off stage. What? I'm going to use a tool as simple as 2 moving averages. I don't care which ones, right? And you say, hey, this is a bullish market. I'll only buy dips. Well, where? Well, pullbacks to the moving average, pulls back to the moving average, pull back to the moving average, pull back to the moving average, pull back to the moving average. Uh-oh. So then right? So then the next question came up, what does this mean? And after years of observation and study, and I don't know if you fully appreciate how hard I worked in those early years. Okay. I remember the whole experience in black and white with no sound. That's how hard I concentrated. Okay. But I said to myself, this has meaning to me. This meant something. This drop is not the same as that drop. This drop has a different meaning to me. I should probably adjust either my techniques or my expectations for the market. That, Panos, is genius. Or at least it felt like it. Because what happened was I traded aggressively in these periods and made a killing. And then when I saw this happen, I said, uh-oh. And I traded differently. I started moving my stops faster. Okay. I traded less. And I became cautious. And even started looking for like, maybe I should take profit. Okay. Yeah, Nuno's like, well, maybe it'll predict a double top and all that. Well, I didn't get there yet. But what I recognized is that, not that it's probable, but it increases the odds of it. Why? There's less speed. The speed of the market is slowing down. So where will I catch the momentum? Okay. Of course, I didn't know anything about fundamentals. I didn't know anything about seasonality. I didn't know even correlation between stock markets and stuff. I had to figure that over time as well. But I used to call the USD CAD, I used to call that oil. And I used to call the Aussie dollar gold. Like I literally labeled it gold. So I knew there was some underlying fundamental correlations between commodities and currencies, but very generalized and simplified form of that. But why does gold go up? Why does oil go up? I had to learn that over time as well. But that's how I got to this point in time where I look at this and I say, don't be aggressive. You should be concerned and doubtful, but hopeful. But if we get another move down to here, okay, then I probably just take all my money and run. Okay. Okay. So I might have, 27 stops all jammed in here. And then if I get lucky, cool. And if I don't get lucky, I'm out. Clear the board. Okay. Okay. So that's how I got to the 2155. Okay. Now, of course, I also then asked myself about the momentum of price, which is essentially, when I used the 5/8, essentially what it was doing was price action. Up, 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 down, down, buy. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. And so I inadvertently, through moving averages, was trading price action. Molly, back in the early days, I think I only traded 15-minute charts in the very early days. And then what I did was I had an hour, right? Well, here's the classic boot camp setup. In fact, let's just do one of these. Okay. The classic setup, let me just do it this way. Template, standard. Okay. Hourly. Okay. FX Bootcamp standard, 15-minute. Okay. And then FX Bootcamp standard. Okay. I would have this like, really I did like 1 minute, 3 minute. I traded the 3 minute for a very long time. I traded the 1 minute for a year, but I really developed a fondness for the 5 minute or the 3 minute as well. But five minutes, okay. Okay. And so this was what I traded on every day for, 5, 6, 7, 8, 9 years. Just something like this. And I'd look at it and I'd say, all right, we're hanging out in nomad's land on the hourly, so I'm cautious. We're losing angle and separation between the 21.55, so I'm cautious. It's becoming oversold, but this is bad. Why? Because we're not at support. So I look at this and I'm like, okay, pass. Okay. If I was going to do a skippity scalpy scenario, I might just play the psych level. So I might say, okay, I might say pop one there. Okay. And that's it. I just planned out my whole day. Okay. But this was, a day in the life of Wayne back in the old day. But, Jim was there. Jim was there. We would sit here for 3 hours and 20 minutes. It was a coaching session, 3 hours and 20 minutes every day. Okay. And after doing that for 5 to 10 years straight, I realized that much of the time there wasn't anything to do. So I thought, well, how could I improve? Also, back in 2006, I was studying for the Series 3 examination, which was the U.S. government's licensing examination for futures and Forex, futures, options, and Forex by the National Futures Association and the CFTC. And I started piecing the things together where like again, a typical exam question was, an elevator grain operator is buying wheat from a farmer and is going to put it in storage, but is worried that wheat prices are going to fall over the, coming months because of the amount of grain that was harvested this year. So there's too much supply. How would you use options to hedge? And so obviously I passed the exam, but it made me think, okay, you could have a really good year where all farmers are happy, and therefore the farmers are going to be punished by God. Right? Because you think about it, you're like, it was a perfect growing season. Everything that should have happened happened. Every prayer I had was answered. Therefore, prices are going to tank and everyone's going to get screwed. And I grew up in Saskatchewan, right? So life for a wheat farmer in Saskatchewan was always tough, right? So I'm like, well, that's interesting. So wheat prices fall and rise based on supply and demand, and there's a season to all of this. So I'm like, well, I wonder what wheat prices are like in March versus wheat prices in October. Found out that they grow wheat in other countries too. I'm like, no way. So Australia produces wheat. So that must get sold. Interesting. So if Australia is selling wheat, I wonder who buys it, because then they'd be buying the Aussie dollar. And I was starting to make these connections. And I'm like, okay, I understand why. No, I called USD, Aussie USD. I called it I called it gold, because on that trading platform on those days, which was Dealbook 2, Dealbook, the GFT Dealbook FX2, and they didn't have gold and oil. You couldn't trade it. It wasn't a futures, right? When I traded gold and oil and 10-year T-note and S&P 500, I had a futures account, right? That was a different broker, different to everything. So back in the early days, I just labeled Aussie dollar gold, but I was somewhat aware of why. Oh, Australia has a lot of gold. A lot of people say that with South Africa too. Oh, well, South Africa just has a lot of gold. Well, South Africa has a lot of things. Okay. So I started doing some research, and I'm like, oh my God, the United States and China have way more gold. So why do I trade Australia and call it gold, right? And so you can see I'm starting to ask myself fundamental questions, and then started to, find the answers, and then start making better connections and adding better value to my trades beyond maybe it'll fall to 122 and I'll start scalping it. Okay. Another thing is, like, this tells me the angle of separation between the 2155 is diminishing. Technically it's still bullish, but in the market is not a good opportunity to buy yet. It could be if we hit support. Where's support? Maybe the psych level. So maybe at support, it's oversold at support and turns north. And technically, it's still bullish. So maybe I can buy it on a 5-minute chart. Well, that's a lot of ifs and buts, right? And it didn't tell me, well, what my target was. Can you see the evolution of the questions? The questions I asked led to my improvement as a trader. Why? How come? How can I improve? Okay. So by the time I got to maybe 2007, 2008, I started paying attention to leading indicators, not just lagging indicators, because the lagging didn't help me predict the future. It only helped me analyze the probable market conditions of the moment. Okay. Okay. So then I started looking at pivot points, and there was some knucklehead that was selling a pivot points course, and I didn't take it, but I bought for $5 a copy of his book on eBay, and it was a joke. It was pathetic. So I'm like, well, but the interesting part is I started just studying things myself, making my own calculations and doing my own observations, because what he had was generally worthless. Right? So I started looking at pivot point calculations. And and you can see like, well, it wasn't helpful here, but it was helpful here. Why? And what could I see, or what do I need to know to say this is going to work and this may not work? And that's what I found was the problem with many tools. When it worked, but when it didn't, it didn't. But I needed to know when it wasn't likely to work. Excuse me. Otherwise, you ended up just breaking even all the time, and I got frustrated by that. I tested everything, and everything worked, except everything didn't work consistently on the long run. So you're like, okay, so why did it work here? Why didn't it work here? How can I improve? And then I started looking at average daily ranges and average true ranges, and then Fibonacci, and then I created something called Fibbits, which were these blue lines here. Fibbits are a combination of pivot points and Fibonacci levels. And I played around with that for several years. Okay. And the sum of the whole experience told me, or reinforced, where I had started. If the market's bullish, buy dips. If it's no longer bullish, don't buy dips. Sounds easy enough, but of course, as we know, most people don't do it. Okay? So then you kind of say, well, what time frame, correct? Isn't that the next one? Do you use daily? Do you use 4 hour? Or is 1 hour good enough? Okay. So you have to make decisions and say, well, on the 4 hour, it's been technically bullish since the first week of May. On the daily, it's been technically bullish since the end of April. Okay. Is there other information here that might be helpful to me making decisions? Okay. So if I feel comfortable here, I say I only buy dips. What does that decision lead you to inadvertently? If I make a decision to only buy dips but not drops, that indicates trend. Okay? But it also indicates price action. And then I say, well, that seems to be what my 5/8 is telling me on the small time frames. But I used to kind of wait for the 5/8 I couldn't anticipate it, but now with price action, you could anticipate it because you know you couldn't have a lower low. Okay? So if you can't have a lower low, then that's where your Fibonacci is going to be quite helpful, right? Stuff like that. So now I can anticipate when I'm up here that it's going to come back and there's going to be an opportunity. And when I'm up here, it's going to come back and give me an opportunity. And if we work our way up here, it's going to come back and make me an opportunity. If we're up here, I'm going to get a pullback. Okay? Cool, right? And what this also tells me is it will probably take a few days. Okay? So you can keep adding layers to this. Insert custom, zero lag moving average, 21 shift 4. Okay. And now you could say, well, these are lagging. Can I speed them up on the daily? Okay. So now I'm doing leading, but also I'm trying to reduce lag. Cool, right? Cool. So I hope you find that helpful. That's a little bit of a genesis. Okay. All right. We're getting closer and closer and closer and closer and closer to the line in the sand. We'll see if it's helpful. Looking at gold, XAU, still maintaining its up. It's technically bullish, don't you stink? Okay. Hitting weekly targets. Okay. You don't have to be a rocket surgeon. Hey, what is that big red thing at 119? What the hell is that? Right? Yeah. Now, there's room for this to go to 1917 and a half, but make your decision, right? Okay. Silver, okay. In the fib zone, this is the middle of fib wars. You got to be careful. There are bears living here. Oh, for show. Okay. If there are bears, that's their plan A. Bearish plan B's are up here. I'm not saying they're bears. I'm saying if there are bears, you need to plan accordingly. It's very easy to anticipate them being at these prices. Okay? So if you're a bull, what do? Well, your plan A would be buy here, right? Or hang on here where you're probably long. So you're probably long at 27.50. Okay? And now you're approaching a bullish roll reversal, but you got a lot of pressure on top of you. So make a decision. Okay? Revelations, by definition, a front run would be somewhere between Wednesday and Monday. Typically, it's Thursday, Friday, Monday. Thursday, Friday, Sunday, I should say. Wednesday is not typically a front run day. It can be, but it's not typical. Gold farting around, Rand farting around. Okay. This is where you could use a MACD. For example. Okay. What do we see here? Less bearish. Okay. That's all. Easy peasy lemon squeezy. Move. So I think we did dollars. We did yens. Did we do yen? Yeah, I showed you the pound yen, right? Yeah. All right, I guess that's it. Sorry. I've only slept a few hours today. Sorry about that. So I guess I'll just call it a day. I'll bid you adieu. Thank you to Traders Wave for being part of our community. Thank you to you for being part of your community. Please click the like button. Please leave a comment on the recordings and all that kind of stuff. Do what YouTubers do and do it well. Peace on earth. May the pips be with you. May our profits be above average. Hope you have a great day. I'll see you tomorrow. Thanks for being in my life. Cheers.